certainly through my parents and my family have had a long time understanding of the importance of education and the difference education can make in the life of an individual, but also the life of a city and a country and a state and the world. So I was 55 or so when we started the first fund in 2016. So I became an angel investor, and I became a pretty active angel investor, 50 or more investments.
Thanks, Deborah, for coming to our show, Wiping Out the Norm. We, as a theme, talk about unconscious gender bias that women face, especially in the world of investing and entrepreneurship. And you are one of the few women who have really made to the top and started at a time when women didn't do so much of the work that you are doing currently. So let me start by asking you as to what got your interest into education. I know that you've been from one of the topmost universities like Harvard. So I'm sure that you were someone who were really interested in education, but how did you take your interest from there to what you are now?
Yeah, well, thank you for that. Got a long way to go to the top, but yeah, I certainly through my parents and my family have had a long time understanding of the importance of education and the difference education can make in the life of an individual, but also the life of a city and a country and a state and the world. And have had a view that the mission we have at GSV is that all people deserve equal access to the future, and we believe that achieving equal access to the future, that innovations in education and workforce skills are at scale, importantly at scale, are kind of are a critical wedge in delivering against that mission. I was an investment banker for many years, and worked at Merrill Lynch for 13 years actually, and ended up recruiting a partner named Michael Moe to Merrill Lynch to be my research. I was an investment banker, he was a research analyst, and we were focused on growth sectors of the economy, and Michael was pretty well known for that on Wall Street at the time. And one of the sectors he had identified really in the mid 1990s, so a long time ago, was education and education technology in particular. And he had the hypothesis that EdTech should become a major investment category. And the reason his hypothesis was really based on, and this is true of pretty much every country, it's a huge portion of GDP. It is typically incredibly fragmented, typically highly dysfunctional, with the exception of a few countries where it is highly functional, but it's certainly dysfunctional here in the US. Highly dysfunctional, fragmented, and yet, such an important problem. As I said earlier, but something that if you fixed it would make the difference, all the difference in the world for individuals, but also for countries. Wow. And so when you have those kinds of characteristics, the bigger the problem, the more likely it is that great entrepreneurs will jump into the ring to try to fix things. The education technology sector had not at that point been sort of typified by great companies. They had a few sort of dogs and cats in the sector. Michael was early, and we really didn't see so we started building a growth practice at Merrill Lynch. Education was a piece of it. It wasn't everything, but it was a piece of what we did. We ultimately left Merrill Lynch to start our own company called Think Equity Partners, which was a growth-focused investment bank. We sold that in 2007, and then left to start what became GSV. And I decided when we made that break that I had become very obsessed about the leverage that was inherent in great education and workforce skills solutions. And so I decided to really drop, just singularly focus on that sector from a professional perspective, but also from a philanthropic perspective, and using my my time and everything else, my volunteer time, to do educational initiatives. And we were still early when we did that. It really was 2010 was the first year we saw a big influx of great founders with great new ideas come into the sector. So that was around 2010 was when great companies like Coursera, ClassDojo, Duolingo, Course Hero, so a whole slew of great companies that were tech enabled. There were technology companies began to appear, and so that was the first wave. But that's how I got there. It was it just was something that I knew, it was something that was you could get you out of bed every morning. It was exciting. It was a sector that is, has got a lot of frustrations to it, a lot of friction, government regulation, all the things that we know about. But at the same time, if you're successful, the satisfaction of being successful is incredible because you can really move the needle in people's lives. And so that's been, that was really the genesis. And as I said, certainly my parents they've been great social entrepreneurs around initiatives and education in Florida, where I grew up. But so this was sort of a leg off that, but it was, so it's been a good run.
Yeah, I see that you have taken all educated moves in the education sector, right from joining an investment bank and working on that piece and then starting something of your own, selling it off and then starting again up. But tell me one thing that in these things common, would you start the same way as you did some years back, given the current environment? And if not, what would you change?
It's hard to re-engineer something that happened a long time ago. I think when we started our ASU GSP Summit in 2010, and that became the engine for our raising funds, because when we started the summit and started inviting all these ed tech companies from all over the world, and the Indian ed tech companies came very early to our event, and we started getting inquiries from folks about investing. We didn't have a fund. We thought it was still too early, but we began to see some really great entrepreneurs with some really good ideas, and so I became an angel investor. And I became a pretty active angel investor, 50 or more investments, and some of which were pretty good, and so that's what led us to start our funds in 2016. I guess, and that is a long-winded way of saying, I mean, it is funds are a very long-lived. I mean, they're not things that turn on a dime. You don't raise a fund, invest the fund, and then immediately turn. It really is it's an endeavor that should take 20, 30, 40 years, really, as you think about the life of funds, and obviously partners migrate off and new partners come in. If anything, I got started on that late, so I was 55 or so when we started the first fund in 2016, and which is much later than people would typically get into the venture capital business. But so if anything, I wish I'd had the opportunity to start earlier, but at the same time, I had 3 children and worked through all of that. I'm not sure I could have done a fund through all of that. I was working at Merrill Lynch when I was doing that, but or in the early days anyway. And so I don't know if it was possible to reverse that or to shorten that order. But if anything, I wish I'd started earlier.
Understood. Yeah, actually. And how did you, because you said that you started at 55, when most people just think about retiring, how did you have this energy of starting off fresh again, leaving everything that you had done before? And you knew that it was going to be tough for you. You started with events so that good startups would come to you to take investments. So how did you gather that strength and energy? Did you have a right set of people around you, or what did you have in hand to get going?
Yeah, no, and I'm not somebody who thinks about retirement, so that's not hard. We started the summit when I was in my late 40s, but it was, I was just really, I was very passionate about the sector and about what we could do in the sector and about building community in the sector, which we've done through the summit. And so it was we have some fantastic folks and partners around me. some of whom we've worked, I've worked with Michael for over 25 years. I've worked with a couple of the other partners for over 10 years. And so we have a lot of continuity in our group. And yeah, so I think if something excites you, I think it's not hard to get the energy to get behind it. It's
Right.
yeah, so
So, who
good.
was the first person to partner up with for the summit?
Well, Michael Moe really, he's my longtime partner. Michael really he really created, it was his idea. And he founded it really with Michael Crow, who's the president of Arizona State University. And that was back probably in 2009. And when Michael Moe suggested to Michael Crow that we started convening, it started tiny. It started with 350 people at Arizona State's SkySong facility in Scottsdale, Arizona. But yeah, so it was really their idea. And then we began to build it because ASU, ASU's been a fantastic partner. I mean, they've been great. And when we started it, ASU's reputation was, and that's one of Michael Crow's motivations, was the ASU's reputation at the time. He'd been there probably 10 years at that point, or maybe a little bit less. And he had huge ambitions, but the university, which was and is the largest public university in the country, was not known for its technological or academic prowess at that point. Now it's obvious to everybody what Michael Crow was doing, but it was not known. And what I think the ASU GSV Summit did was help elevate, gave tremendous elevation to the ASU brand around sort of leadership in the areas of technology and innovation. And certainly Michael Crow has gone on to be, they've been named the most innovative university in the United States for the last 7 years in a row. So yeah, so it's been great. But they were our first partner, and then we had lots more partners come in behind that. And today we have 100 partners with us in the summit. So yeah.
Wow, it seems like a journey, and I can just imagine it in my head. I know that you have seen it in real happen for yourself, but it's so amazing to hear your story that I can put the pieces in my head and imagine how it must have been. But tell me, how have you personally evolved over the years? If I were to ask you, how are you as a student? What really piqued your interest, and now how has it changed? What kind of qualities have you developed within yourself?
Yeah, I mean, that's a great question. I think as a student, I was a very conscientious student, and I think I was a very curious student as well. Although I'd say my curiosity has accelerated over time. I think I didn't appreciate, back then, or when I worked at JP Morgan coming out of college and before I went to business school, and I don't think didn't have the curiosity about companies and about founders and about entrepreneurs that I do today, that I have had since, for the last, probably decade. So I think I had to kind of discover that part of my my interest level, that it was, finance was interesting, but finance was even more interesting when you applied it to early stage startups and to founders with incredible vision and passion. And I think you had to kind of grow into that. I think it was also, I wasn't somebody who was dying to be out speaking in public or anything like that. It was quite the contrary. And so getting myself to kind of to being first comfortable, and then, enjoying being out there when it makes sense, was also something I sort of had to develop over time. But yeah, and I think it is follow your curiosity. Don't stick yourself in a box because you think, somebody told you should be in that box. And I think that's, a lot of what's, kind of important. Yeah.
Right. I'm sure there are a lot of internal factors must have played out in you thinking in this particular way. But externally speaking, were there any influencers in your life early on that made you think the way you do?
Well, I think I had a great influencer in my dad, who is now deceased, but he was a serial entrepreneur, and had just founder, he didn't have a lot of respect for, as he called them, the fee earners. He really, his passion and his admiration was for people who built things, and he did it both on the commercial side. I mean, he built a computer services company very early, which he ultimately sold twice, and
Wow.
but then also once he achieved that success, he then began to create some philanthropic initiatives that were very entrepreneurial, focused on education, focused on low income kids, and getting them to academic success, and tying that together with housing, actually, in my hometown. So he was very involved with Habitat for Humanity and things like that. And so so he was a great role model, because I sort of and certainly a lot of pressure in a good way,
Yeah.
that how he went at things and how important he felt building was, and things like that. So it's good.
Wow. I'm sure that I'm making you remind of your older times.
Yeah.
When you had some great moments. But apart from the family, on the work side of things, did you have any leaders who were your mentors, any bosses whom you worked under who really shaped the way you developed yourself in your career specifically?
Yeah, it's funny. I think that's probably another, I think being a woman in an investment banking environment, which is, sort of what I did for 13 years, investment banking, I would say, is not a mentor. It's not heavy on mentorship, because it's obviously it's a dog eat dog
Yeah.
kind of typically environment. And while I have a lot of friends from that period, I can't say that I had great mentoring. It just wasn't something. It wasn't something that people did methodically, and within the investment banking sector, there weren't many women, and not that you had to have a woman. You don't at all, but it's useful. I think sometimes if you do, and so I can't. I honestly, I think some of my peers, like Michael Moe, like Michael Cohn, some of my partners now have been much better, peer-to-peer partnering versus mentoring per se. So I can't. It was a tough environment in the 1980s in investment banking.
Yeah, absolutely. I mean, till date today, it's considered to be very tough. So I can only imagine how difficult what would it have been in those times. But what were some of the challenges that you faced being a woman in that space at that time?
Oh, it was really, I mean, back then it was the dark ages. So it was really silly stuff. I mean, like men who didn't think, I mean, everything from men who didn't think women should be wearing pants to, in the workforce, to, men running off to play golf at all male golf clubs with all the clients. So that the female partners in the firm couldn't join, obviously, because the clubs were only available to men. So it's just dumb stuff like that, dumb things like that should have been so obvious to male leaders at firms, that things like that shouldn't be going on. But in that day, it was not obvious. And so I was a bit of an activist in that regard. So I sometimes just had to point out how unfair it was that certain things happened that were created inaccessibility for the female members of teams. So it was the basics. And then it was still, and environments like that, there's still a lot of harassment, and it doesn't appear that we've completely gotten rid of that either. But there's a lot of just basic issues like that. Not that that was very present for me, but it was you just had to be a little tough.
Yeah, right. But was your word taken seriously by the people whom you reported to, that you should make the environment more accessible for women also? Because I'm sure that there might be so many challenges that you encountered while putting up your point.
Yeah, no, I think you had to make your point well. And it took work, but yeah, I think if you got the right, and I will come back and say I did have one incredible mentor, a guy named Dan Bailey who ran investment banking at Merrill Lynch, and he was fantastic, and went, I went to him when he was very senior, but he was very empathetic, and he was very and he was very equal. He was very equal and listened, and so yeah, you just had to pick your spots and do it properly, and have a well laid out position that wasn't just screaming, which would get you nowhere. So yeah, people listened if you did it right.
Yeah, that's true. And that's how you get ahead in your life, when you don't hesitate to speak up.
That's right. If you do it right, sometimes that can backfire. But if you do it properly, yeah. I think you can, because not saying what you feel is an energy drain.
Yeah, that's true. That's true. But apart from the gender bias, what were the other challenges that you faced as a banker initially when you just started out?
Radhika, that was so long ago. I just think all the challenges that you naturally face in your first, early in your career, and figuring out what you're going to be good at, and understanding what you're good at and how you can apply that, and so I think it's a self-discovery exercise, and hopefully you've got self-discovery going on forever. So
right. And it also brings me to a question, which I also gathered from what my other speakers had told me, that investment banking is all about type A personalities, irrespective of the gender. So do you also agree with that? And if so, do you consider yourself as a part of that?
I'm not even sure I know what a type A personality is. I do, but I think that investment banking, not necessarily. It's you have a it's a team, and you have different people who are good at different things, and we would have people who are deeply intellectual about tax structure, deeply intellectual about legal structure, great salespeople. I was, once being able to. No one likes to say that, but investment banking is a sales job.
Yeah.
I love the part when you were telling telling companies how they should tell their stories, and developing real, viewpoints on storytelling related to a corporation's story, when they were raising equity or they were raising debt or whatever, two very different things. But I think certainly there are plenty of type A personalities. It probably is the dominant personality type, but investment banking, a great investment banking team is one that has, financial skills are table stakes, but then you have to be able to have folks who have incredible insights into the M&A markets, incredible insights into the equity markets, incredible insights in the debt markets, and it's a wide variety of skills, but it was a great place to learn. It's a hard job. It was long hours. It was, and then I did coverage, so you really develop sales skills when you're covering companies in a region, and that was great, because selling is a really important skill to have. So
yeah, that's true. It's all about showmanship, at least in banking, because you really have to show what you are thinking, and also the business idea that you're working on. But tell me, as to you've been into this space for long, so why did you not choose to be an operator, building your own business, and rather be on the investing side? What made you choose that decision?
To do my own business rather than investment banking. I didn't want to. I wanted to get out of I wanted to get out of a transactional business. It was always about chasing the transaction, sorry, 1 second. It was exciting for me to want to get into a position where we were running our own, building and running our own company, particularly when it came to GSV, and we were building our own and running our own company around an area that I cared deeply about. And it's a grind. Investment banking is a grind, and so to have to always be chasing fees, and it's a hard job, and it's a job that wears on you. I think it's not a coincidence that a lot of people migrate out of those jobs over time. I did it for 13 years at Merrill Lynch, and I did it for 2 years at JP Morgan. That was more of a traditional banking job. But yeah, so it was an easy switch for me to get out and do my own thing. As I said, I've been inspired by my dad, so finding starting my own company, and was a good thing, and that was something that I was excited about, and gave me a whole new challenge, and to be an owner rather than somebody who was just always trying to make fees, was a real uplift, and then to be doing it in a space that I cared a whole lot about, was also good. So so it was a pretty easy decision when we decided to peel out of Merrill Lynch and start Think Equity, and then to sell that and start GSV was a pretty easy decision.
And how did the decision to sell Think Equity come into picture? Because some people are just too close to the mirror that they can't see the bigger opportunity, and they just want to continue on it for a longer run. How did you decide to, part ways?
Well, we were actually very fortunate. We sold it right before there was a large crash of the stock markets. We sold it to a UK firm, and we were looking to have more of a global presence, and we we were on board and had equity and things like that. But I think realized that literally almost as soon as the deal closed, there was a material crash in the markets. That was 2007, 2008, as worse in 2008, and then we had as my partner Michael would say, we learned the lesson that when you sell your company, you don't own it anymore. So while staying on was interesting, the fact that we no longer owned it and could no longer run it was not as interesting as starting our own company again, with a different bent. So.
Right. Coming to GSV, I just recently read a quote by Steve Schwartzman of Blackstone. He says that I only work with 10 on 10s, and 9 on 10s are okay for us, but we don't even know what 7 on 10s do in this world. So while building your team at GSV, how did you look for that 10 on 10s in your team and build a great culture so that talent could prosper and get nurtured within it?
Yeah, I mean, I think it's always, you're always looking for the best talent. I mean, that in talent, every time you bring in a 10, it elevates the organization in ways that you don't even imagine when you're making the hire. I think that, we have a very wide variety of people within our team, because it's not just investors, it's people who are community builders, it's people who are incredible people managers, it's people who can run events, which are complicated, hard, very detailed things to do. And so we have a wide variety of job classification, and we to some extent, I hate to say this, but it's got, to some extent it's your gut, it's getting references, it's making sure that person has got real mission alignment with what we're trying to do, because it's a mission-driven company, and we can't, whenever we dilute that mission, we have to reverse course. Investing is not for everyone. It's not it's a small, most folks kind of, a lot of people will pull out and go into operating roles and things like that, because they realize they got in and they would much rather be an operator. And that's great too. We've had, we're thrilled. We actually have backed one of our former partners, Julie Stieglitz, who ran B2B at Coursera, and she's gone back out to start a company called CoRise. So it's very exciting. And so I just think, we're a small team, so it's not like we're processing hundreds of people a year, but we care deeply about mission, about, obviously have things that are table stakes, depending on what job you're talking about, whether it's financial table stakes or ability to work within teams and things like that. But it's very true. Every time you bring somebody in your team that is a 10, you are elevating the entire group, and we're very blessed that we have a terrific team of folks who are with us.
Deborah, sorry, your network is a bit patchy. Your screen is crackling a bit. It's not clear.
That's funny. I've got full bars here.
Okay.
Yeah, you'd gone out a little bit, but I've got full bars. I don't know.
Okay, no problem. That's fine. We can edit it out. Today, technology is very good. Cool.
Yeah. Is it back again? That's really weird. Or the Wi-Fi
Yeah,
appears
it's
to be.
better now. It's
Yeah.
better.
Okay.
Yeah. So I was saying that, do you look for certified smartness, which is people from MBAs and IITs and, big institutions, or you also get people who are generally smart but not holding a very big degree? Do you hire such people?
Yeah, I mean, we have a wide variety of sort of academic backgrounds, from no college to business degrees. I don't think we have anybody. We have people who have education. We have a couple of education masters. Yeah, we're not. I think we like most of the market these days are not terribly hung up on, most of the market in the U.S. anyway. Increasingly, not hugely hung up on where you went to college. Although certainly we have lots of people who went to some of the Ivy League and Stanford and folks like that. But we also have we're really trying to hire people who are great at what they do, and if the academic part is important, fine. But if it's not, it's not. If an academic, some affiliation is useful, like having it, like having an MBA, if that's a useful thing, that's fine. But no, we're not terribly burdened by somebody's, the name of the college or business school they went to.
Got it. I'm sure this answer will give confidence to a lot of people who are watching this. But tell me, how has your core investment thesis changed from the time you started to now? Because I see that you are heavily investing in India also. And Divya, who will be on our show next week sometime, she is one of the star, performers of your portfolio. So tell me, how has the thesis evolved over the years?
Yeah, and we have a small position in Baiju because they acquired Tinker, so that's actually so it's just small. And Divya, she's terrific. I interviewed her at the summit this year. Our thesis is really we're looking for disruptors. We started our first fund was very small, so and our team was very small, so we stayed pretty much in nearly 100% U.S. based companies. So we felt that was sensible because we didn't have the capacity from a human capital perspective to be covering a wider swath of the world. We obviously have always watched India and other parts of the country, but with India being the most attractive. China we were watching at one point, but obviously that's become a moot point. And our thesis really is back to this. We think about the 5 Ps: people, product, predictability, purpose, and potential. And we apply the same framework, which is what we've always done, to companies in India and companies in the U.S. We're also, we're an impact fund, so we're really looking for companies that are driving, substantial impact, and so creating access and disrupting cost. And so, those are the overriding themes. We went into India big with, investments in Lead School in our second fund. We've got, a big investment in Physicswallah in our third fund, which is doing incredibly well.
Yes.
Both are doing well, but again, both high impact companies. We're in BrightChamps, we're in Quizzes, both of whom are in India, but really go to market outside of India. We just went into Midcard, and we got I think about 11 investments we've made in India. And we've spent, a bunch of time there. We have a terrific partner, Mush Vawani, who has led the coverage of the India market. And he's been great. And I've spent a bit of time there. I went back in June. We had an event in India in February, which was very successful. focused on education and workforce skilling and bringing a lot of the startups. And yeah, I mean, I think our thesis, we're looking for disruptive learning and skills companies, and obviously generative AI is kind of taken over at the current moment, and that's the next wave. I think that's creating the next wave of founders, and we're actively investing in founders who are creating with deep technical expertise, but also understanding of the education markets. And yeah, so we're it's been it's an evolving thesis. I think, you know, we only went into India when we had a bigger fund. Our second fund was bigger, and we had a bigger team, and we had, you know, we have two folks who speak Hindi, and that gives us an opportunity to make sure we have, you know, have coverage in that way, and because, you know, that would be, you'd have a big blind spot if you didn't. And yeah, so that's kind of the evolution, but we're excited. I think it's very early innings in India. Obviously it's cooled down a lot as it has here, although the cooling down has been offset by the generative AI activity in the US. I don't think that's happened yet in India. It will happen in India, but yeah, it's a long way to go for the digitization and democratization of education in India.
Yeah, that's true. But which other market are you seeing rapidly scale apart from the US and India in education specifically?
You know, we just not. And I think there are other Southeast Asian markets that are scaling. We're not necessarily one that we're talking about. I think, you know, we've just gone a little bit into Latin America. We've gone to Mexico, Mattilda. You know, we make sure we're smart. There have been things like that there that we don't want to get did by without making sure we don't know. We know we don't. So, I mean, I think really India and the U.S. are pretty dominant, and in terms of TAM growth, at some point, Africa will be an important market, but it is different in that it's not a single. It's big, and that's where most people be on the African continent. But it's not one country the way India is, right? It's you know, many countries. So that creates. I mean, even in Latin America, you'll have founders say who are based in Mexico talk about how hard it is to go to Brazil because of the Portuguese versus Spanish. And some people will often say it's easier to go into the U.S. than to go into Brazil if you're coming from a non-Brazilian Latin American country. So yeah, you have to be careful. There are all kinds of things that could trip you up going internationally. So we're hoping we're careful.
So my last question would be that, you know, do you see a lot of women entrepreneurs in the EdTech space? What's the proportion to male versus female entrepreneurs in this ecosystem? And do you think that the way women pitch their businesses, that's very different from the way men do?
So in the U.S., we see about, you know, a third, depending. Every year at our ASU GSP Summit, we have this competition, and we ask whether they're female, whether there's a woman co-founder or person of color co-founder, which is more relevant for the U.S. than for India. But and what we found is it's between a third and a half, which is a pretty fantastic statistic. Considering other technology sectors, you know, do not have that kind of participation rate from women and from female founders. And so I don't know exactly what to attribute that to, whether the sector itself lends itself better to female founders. We do need more. We back one woman who is Rachel Carlson, who runs Guild Education, and that's a, you know, that's don't even like using the term unicorn anymore, but that's a many times over unicorn, great company. So what I'd like to see at this point is more women, not only founding companies, but actually achieving scale. I think we haven't had the same success rates of women founders getting their companies to big scale, but certainly Rachel is leading the pack, and others are there as well. But she's notable. So I think that we've had, and I'd say in India, we don't have any female. Yeah, we do. Smita at Lead School, of course, is co-founder. If you count Baiju, which we didn't invest in directly, we got through acquisition. Obviously, Divya is a co-founder, but I would say that the statistics in India are not as robust as the U.S. numbers. I'd say we see far more all male teams, founding teams, and I think that's probably not out of, I mean, it's probably consistent with just workforce participation rates and things like that in India still lag for women, as you well know. And so I think as those things come along and you have, increasing, I mean, at this point, women outnumber men in terms of college graduation rates, and we're seeing big spikes in women going into engineering and things like that. So I think as those sorts of things waft their way through the system, then I think we'll begin to see, higher performance, higher participation. It's not participation from female founders. And I think in terms of presentations are personality driven. So whether I present like a man or don't, or like a woman, I'm not sure even what that means, honestly. I think telling a story is telling a story, and everybody's got to, put their personality into that. And I think it's very much about, I don't think a personality's traits are linked to being female or male. Yeah, and I think, and some people are better at presenting and telling stories than other people. And again, I don't think that has anything to do with whether you're a man or a woman, but yeah, so we've seen great female presentations and great male presentations. And I would not ascribe a big difference to one way or the other, but yeah. So.
Yeah, that's a fresh perspective actually, because a lot of people say that women are more conservative in terms of talking about the numbers, and they won't ambitiously project their future growth, which sometimes makes investors jittery. So I was coming more from that angle.
Yeah, no, I don't think that's, at least it's not true here in the US. I think
might be more so here.
Yeah, I think if you're a founder and you're out, raising money, and a lot of coaching, people get a lot of coaching, whether they're Y Combinator or accelerator incubator or other investors, about, telling stories well and telling stories clearly and articulately and with great support and all that sort of stuff. So, yeah, no, it's good. It's good.
Yeah, I hope we see more women in this course of education. But thanks so much, Deborah, for taking time out. I hope.
Radhika, thank you.
My questions. I hope I didn't bore you.
No. That was great. Thank you so much.